why it's really important to have a plan and understand what your goals are.
In fact, my camel out there is suffering right now with a broken back.
So I actually found Pepe when it was only a couple of hours old, and I'm like, oh, this is a funny meme.
Oh my god.
Yo! Who is this degen?
The old man is swing trading over years at a time. And it's like, that's where the real money is made.
The answer is a permanent loss. With single-sided staking, you don't have to worry about impermanent loss.
And really, at the end of the day, it's just the matter of a macro market. It's just what happens.
If you're aware, if you're disciplined, you can hone that into further financial growth.
Financial freedom, so where you can actually live life and not have to be constantly living paycheck to paycheck. I mean, that's the ultimate goal, more or less, right?
Good evening, ladies, gentlemen, and gentlemen of all ages. Welcome back to another flagship news Sunday show here at the Degen Roundtable. We're very excited to be here with you tonight. Ethereum has made pretty much new high for the current 4-year cycle. Not all-time highs, unfortunately, but it appears that the hype that has been building over the last month and a half, 2 months, whatever you want to call it, is really starting to creep up there and start going to the moon, so to speak. Outside of that, we do have some interesting articles for you tonight. We're going to be talking about what Wall Street and what some other folks are thinking about Ethereum and potential price increases. After that, we also do have an update on kind of the ghosts of Operation Choke Point 2.0, or rather, how debanking is becoming the new hot topic. And there's actually an executive order signed to try to fight against this, and it helps out a lot of people. Crypto folks just happen to be one of the major ones. After that, we are going to keep a little more of an eye on Ethereum, as it appears that some people have been actually increasing their positions when it comes to their Ethereum strategic reserves. So we'll check out all those numbers and more here on the show tonight. Outside of that, though, hello, I am your host, Zenith. Welcome back. We are very, very happy to have you here. I'm joined by my excellent co-host, Mr. Brendan. How are we doing, buddy?
I'm doing well, man. It's been a good day. Was out, only got 1 week left in Miami before we moved. So last night we were out with a bunch of friends, went karaoke, and so we're out late, like 3 a.m. or so. Early for Miami, but late for me. And that was fun. Slept in a little bit today. Had a fantasy football draft this afternoon. Went to church, and now I'm here, man. So full day. I'm excited. And actually, I have a friend. When we get into the debanking, I have someone who I've been talking to about crypto for quite some time. And in the bear market, we were eating dinner at a nice restaurant in New York. And he asked me, well, what happens if the government bans Bitcoin and crypto? Like, how can you be in it still? I'm like, the ball's already rolling, brother. I'm like, he can't stop it once it gets going. And then once Bitcoin hit like 100K this year, he was like, congrats, you were right. But anyway, he has a debanking story that he told me this week. And he bought his crypto for the first time because he needed to be able to pay somebody. It was kind of crazy. Anyway, we'll get into that later.
Very bullish news right there. Already our third chair of the evening joining us from on the road, allegedly. Mr. Will Stevenson, how you doing, my man?
Aloha, amigos. I am currently on, I think it's US 287, whatever's the road that's in between Dallas and Amarillo. For those of you guys who don't know, you can go to Amarillo and get a 72-ounce steak, and if you can eat the whole thing in under like an hour, then you get it for free. And I've never been able to do it, but it is a big, I have ordered the steak before. It's freaking huge, but yes, it's freaking ridiculous, man. But anyways, I'm on my way to Portland, Oregon, and life is good. Just driving around. I realized, Brendan, we had all this talk long time ago about a Degen Roundtable meetup in Miami during Q3 or whatever the heck of 2025. And we actually did it. You and we had our Degen Roundtable meetup in Miami. So totally like skipped my memory holes. But when you were talking about like your last couple weeks in Miami, I was like, oh yeah, we were going to have a meetup. Oh wait, we did have a meetup. So we fucking made it, boys and girls.
Will, that's a good point. But I'll also say I do still want to do a full Degen Roundtable meetup, with all the people from our community, with all of us. The plan has always been like end of the bull market-ish, post-bull market. And it's because it seems like we're kind of extending either towards the end of this year or maybe into Q1 next year. It might get pushed a little bit. But I'd say the goal, at least from my standpoint, is still have a meetup. could still be in Miami.
Oh yeah.
It's just timeline didn't line up exactly what we were originally expecting. So, roll the punches.
I definitely agree, but I'm still gonna celebrate the one that we already did. What you got, Z?
There you go. I was gonna say, if the market does go into Q1 of 2026, and we're looking to have the meetup then, there may or may not be another very large event that we are already slightly a part of that we could definitely piggyback off of, and that, of course, is the Pulse Chain Conference in Las Vegas.
Yep.
So maybe just extend our trip by a day, have a fun night for everybody that just wants to come hang out. Maybe I don't know, do a little casino night or something. Maybe not real money or just a little private event, but honestly, that doesn't sound half bad.
Doesn't sound half bad at all. What are the dates for next year's? Are those already out? I know it's usually March, but
March 6th to the 9th usually.
Yeah, I would guess it'd be 369.
369, that's right.
Yes, sir. 6th to 9th is Friday, Saturday, Sunday, Monday. So I imagine it'll probably be Thursday, Friday, Saturday, Sunday. Typically what they do.
I presume they've locked in the scheduling. That's what makes sense to me. I don't know for a fact, but I'd be willing to stake a gamble that those are the correct days. I'd probably put my reputation on the line saying that's right.
It's not a bad idea, Zenith, and I don't know what I have for connections in Vegas anymore, but you never know. I might know somebody. I might know one or two people that might be able to help us out with a venue.
True, definitely. I mean, also got the Moon Gang, Charlie Miguel, Rich Dads right there. They could help us get hooked up as well. By the way, we do have some potential also Moon Gangers in the chat here tonight. I want to say hello to everybody first. Mr. Will, do you have the thing?
Oh, I did not forget to bring the chat shout-out paper with me for this magical excursion. So it's time for chat motherfucking shout-outs, ladies and germs. Send it, Z.
Love it. All right, first one. He's been killing it. Our first degen of the evening, Mr. Slide 180 himself with the cheers. I only have my green screen flavored La Croix tonight, so outside of that, great. Agua. Hey, very good as well. Got one of those over here too. But Josh, good seeing you, sir. Good hanging out with you on Book Club. That was a fun show. He has been. Definitely on the Friday shows as well. On Friday, Will and I covered Atomic Habits. It's a nice, clean, to the point book. We really enjoyed it. It's kind of like a book that you can think about logically to get 80% of the way there. And then the guy through his research and his studies and experimentation will really help you fill in the rest of the 20% when it comes to building good habits and trying to make them actually stick. Try to get that psychological loop going. But yeah, excellent stuff. Good to see you again, sir.
It's a great book.
Up next, we got Hexkin Lost in Asia. He says 171K to 166K. Where did the ETH go? Why is the rum always gone? Well, I mean, look, just a 5K decrease on what it looks appear a decently six-figure holding right there. That's just normal market fluctuations. Don't give it too much thought. Just have fun on the beaches out there in Asia, wherever you are, my man. Outside of that, we also got Tonio. He says, hello, friends. This is not financial advice. It's a financial guarantee. Yeah, good to see you, sir. Mr. Tony was in a Twitter X Spaces with our very own friends and good buddies, Boogie and Twinkie. I had a chance to sit in on that one. I tried asking Twinkie to accept my request to speak in the panel, but he was a little preoccupied, didn't quite get to it. But Tony has some great stuff, also fellow Moonganger. So love seeing you around, buddy. Hopefully we'll see more of you soon, and hopefully in person. So there we go. Speaking of good people that we know, Funkmaster Hex, ladies and gentlemen, good evening. Good evening to you, sir. Hello.
Cheers.
He does have a small thing for everyone out there, which is hit that damn like video on the way in. Come on. Outside of that, are possibly one of the furthest reaching and largest people in the Pulse Chain ecosystem and on Twitter by the numbers. It's none other than Tam Tam. She says, hello, my lovelies. Hello, Tam Tam. Always a pleasure to see you. Always a pleasure. Tony was saying Twinkie and I were both struggling with the Spaces controls. Yeah, it's a little unintuitive. There's not a great way to select the microphone. So this setup didn't play nicely with Twitter in the past. So I think I've got it figured out. But more Twitter Spaces coming. Love to see you guys there. We might have to host one of those sometime soon, maybe. We'll see.
Like it, like the idea.
Alrighty, gentlemen, that about covers it for the chat shoutouts. So with that being said, let's get into it. We're not going to bury the lead tonight. First thing we're talking about here is we are talking Ethereum and how high did it go? So we are pulling up our good old chart here. Looks like Ethereum got all the way up to about $4,300, currently sitting at about 42 and change. But I gotta say, this looks like a nice, healthy, aggressive chart. Again, we had that low back in April, and since then, it has been off to the races. We did have that good time where on the RSI, we were in that overbought area, which leads for some really explosive growth if you can stay up in that area for a while. We have recently just gotten back in there, but we've not gotten nearly as deep as we were back about a month ago. So with that being said, I do personally happen to believe that we are in a new 60-day cycle, which means there should be more on the upside coming. And a lot of the macro news is going to be come out next week. If we get some good numbers behind it, then that should help pump things even further. And we have a lot of time to run until we get to the next Fed meeting, which is mid-September. So Jerome Powell can't ruin the parade or rain on it anytime soon. We got at least a month before we're clear of his next press conference. But outside of that, though, very healthy looking chart on Ethereum. We're back above our 20-day moving average, and our 20, 50, and 200-day moving average are stacked very nicely and starting to fan out a little bit, which, again, is indicative of a very bullish movement. So that's where we're going to the upside. As far as where we can possibly be going from here, let's tell you what, do some live TA real quick. We'll pull a quick fib. All right. Next possible price targets for 4,500, 4,900, and even 54 for our 0.786. I don't think it's very likely. Sorry, go for it.
Will, you first.
I was gonna ask just kind of a silly question because I'm still getting used to fibs, and there might be some folks at home too. When you pull a fib, you go from the last top to the last bottom, right?
So
is that how you do that correctly?
There are different ways that you can do it. If we go over to our handy dandy tools here, we have Fibonacci retracements, which you can go to a top to a bottom or a bottom to a top. That'll give you Fibonacci levels between the two. Or what I just pulled here is called a trend-based Fibonacci extension. So I pretty much went from our last local low to our most recent local high to our most recent local low. And that shows us if we have similar moves from the last one based on that downtrend where we could possibly moving into the future. The reason that Fibonacci's are important for the part of the market that we're in right now is we're looking for price discovery. So we have no financial data from the past about previous support and resistance levels or where it's topped out previously. Right now, what we are working with is our previous all-time high. But outside of that, there's not a whole lot of data. Pretty much everything else is going to be stuff from back in 2024, 2023 even. So we're already well above that right now, which means we're kind of in uncharted territory. So the Fibonacci's, based on obviously the Fibonacci sequence, helps out with a little bit of determining where those next levels might be based on psychological effect, just kind of like patterns that emerge in the markets. And it just so happens that the old golden ratio Fibonacci sequence matches up very nicely with it.
Yeah, it's interesting because 4,900, where have I heard that number before? That is just about ETH's all-time high. It makes a lot of sense for us to run to about 4,900, 4,850 in that range, and then get rejected, come back down for the next cycle. And then once we break through and, on a close, love to see a weekly close broken through that 4,900. Then it's off to the races. I mean, then, like you said, it's price discovery, but I think this is lining up really, really perfectly for resistance at the all-time high, a retracement, and then boom, new all-time highs in the next.
Well said, sir. And I got to say, as far as the market sentiment right now and just overall sentiment from investors and Wall Street trying to put money in, we still have the Ethereum ETF for staking that's still in the pipeline yet to be approved. But outside of that, we're starting to get stuff like this, where CNBC is, as the kids say, starting to glaze Ethereum a good bit here, talking about how it's gone from a scrappy experiment to Wall Street's inevitable backbone. They do a pretty good history here. People talking about, oh, who's that kid? And people are like, no, that's Vitalik. He's no kid. It's like, all right, sure, man. But if we get all the way down here, we get to here. It has now become the plumbing of Wall Street. Stablecoins, digital dollars that live on Ethereum, power trillions in payments. Tokenized assets and funds are moving on-chain, and Robinhood recently rolled out tokenized U.S. equities via Arbitrum and Ethereum-based Layer 2. Circle's USDC, the second largest stablecoin that settles around 65% of its volume on Ethereum's rails. According to CoinGecko's latest State of Stablecoins report, Ethereum accounts for nearly 50% of all stablecoin activity. Between Circle's IPO and the stablecoin-focused Genius Act, now signed into law by President Trump, regulators have new reason to engage with rather than fight this information. So there you go. We're starting to get the favorable coverage by CNBC right there. Good. I think we've been getting it for a bit, but this seems like it might be a little more of a one step further kind of thing. What do you guys think? Is the traditional or legacy media actually catching on to cryptocurrency and hoping that it might pump their bag soon?
At least the big ones, Bitcoin, Ethereum. I mean, they're definitely latching on to those two. And it's not a surprise that they're starting to do it after these large companies are starting to accumulate billions of dollars of Ethereum. President Trump's family, World Liberty Finance, most of their holdings are in Ethereum. So people are waking up to Ethereum after what happened when people had lowest sentiment. I mean, this is time and time again that when you see low sentiment on a good project, it generally means you're going to see something to the upside sooner rather than later. And the sentiment on Ethereum was awful. I mean, in our chats, people were bashing on it, and they're like, maybe I should go to Solana, maybe I should go to XRP. Woo! And I'm like, I've never been more bullish on Ethereum, and I was accumulating more Ethereum. So it's bullish, but I don't think the mainstream media would have caught on if it wasn't for these big entities starting to buy massive amounts. I mean, it's hard. It's impossible to miss that.
Well, and also you got to figure it's like a reflection of the price. Like the big entities don't talk about it when the price is in the shitter. It's like that. It's. I'm not going to say it's a top signal, but it is like, oh, the bull market is heating up, and we're somewhere significant kind of signal, right? They did this last cycle. They talk about Bitcoin. They talk about Ethereum. They start putting the price on their little chyron on the bottom of their screens. They're another signal that a lot of people are looking at it. And also, like, when the price goes up as much as Ethereum did in the short amount of time as it did, and it's like, yeah, they're gonna start talking about it because it's what the people want. The people want their heroin, and so they're gonna start listening to the news guys that talk about the cool new thing that's happening, and then you're gonna start getting the retail FOMOing in and everything. So I personally think that it's all part of the cycle. As far as like, are they actually believing in it? Are they actually realistically investing in it? I think I'm on the same page for that one, Brendan. What about you, Z?
I think it's something we talked about the last few weeks on here, which is that we're starting to see people who want to become the Michael Saylor of Ethereum. And I think people are starting to realize, specifically traditional finance folks and Wall Street folks, which is that the Bitcoin position, they are late to. A lot of bigger people have gotten to it sooner, but at the same time, the cryptocurrency space is still massively profitable, as we've seen by the ETFs that have been rolled out. Bitcoin, obviously the biggest one that has just had tremendous success. Ethereum has also been absolutely heating up lately. But what I'm seeing is potentially maybe a little bit more of a rotation of capital. So when we go, the reason I say that is because if we go over and we look at the Ethereum to Bitcoin chart, again, we've continued to pump more towards the Ethereum side of the house. It seems that it could be either two things. One, Ethereum is just doing better than Bitcoin in general. Two, Bitcoin is starting to approach diminishing returns for investment. Or three, it actually could be a combination of both of those factors together, which could lead to what we're seeing right now. I mean, we talked about it and we're going to bring it up here in a second, but people have been buying Ethereum up at a rapid pace in an attempt to try to accomplish some of their goals of like buying and staking 5% of the total supply. That's no small feat. And if there's enough capital behind it, you can definitely affect the markets, because that's the kind of capital that it takes to affect these markets. Bitcoin is the number one market cap. Ethereum is number two right behind it. Those are what we call some heavy assets, meaning it's going to take a lot of energy to pump them. Bitcoin is significantly heavier than Ethereum is, but at the same time, though, Ethereum is heavy, so it really takes some of those big players to get in there. And I think that's what we're seeing when we see these news reports from CNBC and some of the other stuff, which is that we're actually seeing some big players who want to have their own position, can't really make it in Bitcoin. Why not make it in Ethereum?
Yeah, and it's interesting. Did you hear this week that Ferrari is now accepting Bitcoin and Ethereum for cars. So anybody out there looking at Lambos, just saying, might want to look at Ferraris.
Ferrari is a
like-
unique and interesting case. I know. Yes, I am the man without a Ferrari about to talk about Ferrari in depth here, but Ferrari is actually one of the supercar companies that has the longest legacy, probably the greatest racing heritage as well. But at the same time, they've really been struggling with new competitors when it comes to trying to get people excited about new models, not just the fancy special edition models that people can just make stupid money on, but they also are very much like right in line with Rolex, which is you can't just walk into a dealership and buy a Ferrari or a Rolex. You got to be put on their preferred customer list, and then you might be allocated when there's special releases and stuff like that. We've seen it with drop in their sales. People are calling their designs unoriginal. They're starting to look like everything else, whether you think they're copying everyone else or everyone else is copying them. Either way, I'm surprised to hear that Ferrari is adopting crypto, because they're definitely kind of sticks in the mud when it comes to sticking their nose up at stuff. Like they've sued multiple influencers just for like having, I think deadmau5 was a famous one. And then some other guy like posted his Ferrari with like some fancy bag on it. And they were like, hey, we're not associated with that bag. You take that down. So to hear that they're accepting crypto payments, might be showing they're either turning over a new leaf or they might be getting to desperation. I think one of the great quotes I heard in the car sphere was that, like all good Ferrari stories, it starts off where they're on the verge of bankruptcy, and then they figure out a way to not go bankrupt.
It's interesting though, right? Like in the bull market, it's actually brilliant to be like, okay, you know what? As a lot of people in crypto want to buy a fancy car with their earnings, I hear a lot of people wanting to do that. I don't really care that much about that personally. I care about other things. But I think it's a good marketing strategy, nonetheless.
There's one more off ramp into the traditional fiat system, and you no longer have to go to Bitcoin ATMs. Now you just go over to the Ferrari, the local Ferrari shop, and buy your goodies. That's hilarious.
I got a way to do that. Hit it.
I got a quick little fun fact about Ferrari that I learned not too long ago. And Ferrari, like the word Ferrari means like iron worker or like smith, because like Pharaoh or Farah or Ferris or something means iron in Latin. And so like in Italian, like Ferrari means like iron worker, like it's the equivalent of smith in English. So I learned that not too long ago from a friend of mine who was visiting from Italy. So that's pretty freaking cool as far as I was concerned. So just fun little fact there. Shout out to all the Ferrari guys out there. Love
anyway,
it.
I didn't mean to sidetrack that, but I thought it was interesting.
Yeah.
Tell you what though, speaking of people accepting Ethereum, let's go ahead and bring up one of the stats we wanted to show here tonight. And that is our good old strategic ETH reserve. So you might notice there's been a slight change when it comes to the list here. Bitmine has increased their allocation by 410% over the last 30 days, meaning that they now have 3.5 billion with a B dollars worth of crypto. Sharplink Gaming is right behind them at 2.2 billion. They're up 141% over the last 30 days. But if you've been paying attention to the show, we've been talking about these guys and how they're kind of competing with each other to see who's going to take the top spot. So, Brendan, any new insights on what Bitmine's up to?
I mean, it's pretty incredible. I've been listening to Tommy Lee a little bit this week, and they're serious about accumulating, and I think they're doing it smart, accumulating now around that $4,000 range rather than having to accumulate to what they want when it's 8,000 or higher. So I think that's really interesting. But just look at this. I mean, they only added to their balance sheet, started adding Ethereum to the balance sheet a month ago. So they've literally bought 3.5 billion. Granted, there's some increase in price there. But they've bought over $3 billion worth of Ethereum in 30 days. So if you don't think that's bullish and they're really serious about getting 5% of the entire amount, then it's actually kind of crazy, because Bitmine, Sharplink, and now there are some other companies that want to increase their holding. So we could see I was saying this previously, we had two companies that might want to do each 5%. So maybe they hold 10% of all Ethereum. Now there's other companies that are saying they want to hold like 3 to 5%. So like if we got enough companies to really want to hold for 5 to 10 years, let's say 10 years, and they hold 15% of the entire supply, or hell, let's go high. Let's say 20% of the entire supply. Like that's a shock to the ETH system that could provide prices that previously I didn't expect. So it is really bullish. It's really interesting. I would say the only potential negative outcome was if they were to capitulate and sell, because that could have a really bad cascading effect. But these people are like OG Ethereum, like Tommy Lee, Joseph Lubin. Like these guys have obviously been around for a long time, and they're not going anywhere. They're looking long-term scenario, in my opinion, as does Michael Saylor. So it's going to be interesting to see what happens with ETH. But the amount of money that's going into strategic ETH reserves, and that once one company announced it, everybody else jumped in. It's not like they just jumped in following. That means that they were already having conversations and realized, hell, we actually have to implement our strategy faster because other people are going to start to accumulate, and we can't wait and delay to accumulate, or we'll have ETH will have left us behind as Bitcoin did already. So that's why people are starting. These companies are starting, in my opinion, to accumulate so much so quickly because they are expecting this to pump. And they want to get their money in before that happens.
I agree.
Sorry, I was looking at this last thing. Say, and so maybe there's some playing going around and suppressing ETH's price for a while so that people can get in more at these lower prices. Who knows? Maybe that's a possibility. But yeah, it's crazy.
Will, what you got?
I was just gonna say that it's awesome that it's a race and that it's happening now at what I would consider, if they were doing this in the bear market, they probably would have got way bigger bags, but I don't think it would have made the crazy splash in the news and the awesome campfire story that's now just burning all over everywhere in the crypto space's minds. And you got to figure what it was. You were saying, I think, Brendan, $3.5 billion in, what was it, less than a month that they've started accumulating all this stuff. That's pretty cool to think. I don't know what the price action of Ethereum has been in about a month, but I want to say it's pretty close to doubled or something along those lines. So that's pretty freaking cool. $3.5 billion, and that got enough momentum going. And if you strictly just decide that that's the singular campfire story or narrative or whatever that caused this recent crazy price fluctuation, $3.5 billion to get a chain to do a 2x, that's not terrible. That's a reasonable amount of money. You think about how much money is flowing into Bitcoin. If a fraction of that starts bleeding off into Ethereum to try and catch these pumps, it then creates further splashes, further narratives, and ignites further fires. We could see some pretty crazy stuff happening.
Zenith, if you scroll down and you click on Bitmine, it'll show you their purchases. So you can see their first purchase was July 13th. July 13th. It's actually been less than a month.
Less than a month. Freaking nuts, bro.
And you can see they don't even own 1% of the supply yet, and they want 5% of the supply. So they're not slowing down. I don't see them slowing down. Tommy Lee said he in one of his interviews, we showed it here last week, I think, Will and I, and he was saying that they're accumulating 12 times faster than what Michael Saylor is accumulating for Bitcoin. So we could hit our target next year potentially if we stay on this pace. So they could have 5% of the entire Ethereum supply by next year sometime. That would be insane.
That is pretty wild. That is also an aggressive pace, though.
Very aggressive. I don't think you can keep it up personally, but
yeah, if the data on screen is correct, they're at about 0.7% of a supply. We also got the funny number there. But if at that rate, so we're looking at what, 5%? So that's 5 divided by 0.7, that's going to be probably 8 times the amount. So we're looking at about 24 or maybe $26 billion worth, assuming that Ethereum stays at the current price, which obviously it's not going to. That is no small chunk of change. That's an extra 24 billion you got to put in there, which is pretty wild.
Let's see, it is. It is. Look, and as the price goes up, they're not going to be able to accumulate as much, which is why I think they're being incredibly aggressive right now.
That makes sense. I'm curious now that we know we can do the feature. Pulse chain SAC, just been at that for a long time.
Yeah. And heavy profit, might I add.
How
True, it's true. Will, I do have an answer to your question from before, though. So for the month of June, Ethereum did go up about 49%. If you want to take it and to include this month, it's gone up about 73%. But if we also want to extend it, so back through April, since April, if you want to take it to the candle body, it's 143%, which is a little more like a 2.5x. But if you take it all the way from the bottom, that is a 3x.
God bless America. That's freaking
Go,
cool,
sir.
man.
As far as who else is buying, I want to show this one. So apologies. This is coinglass.com and how they track Ethereum, the Ethereum ETF. We don't get the nice full screen thing. We just get this small chart here. But one of the data points I want to point out is that we've had pretty much since early July, we've had 7 days that have been larger than any single day for the first year of the entire Ethereum ETF. So the Ethereum ETF was out for a year. And then after that, that's when we start to see the massive inflows. And we even have our peak inflow here. I want to say this is the day where we saw, I don't want ETH, I want USD. We saw $750 million come in. And then recently, this last week, we did have some folks taking profits on 2 days here. This is the ETF flows. So it's not encompassing the entire market, but for the ETFs is what we're seeing. So we saw the outflows, and then immediately we see the inflows backfill and come right back in with another $500 million day of inflows on the Ethereum ETF. So it's not just institutions, it's everyone that's going through the ETFs as well, including the institutions that may be using it that way. But overall, dude, all signs are pointing towards bullish stuff going on with Ethereum right now. And I don't expect it to stop anytime soon.
Now, Zenith, a few weeks ago, prior to this really taking off, we were talking about our expectations for ETH for this cycle. And at one point you had retraced your bullishness just a little bit, still bullish, but a little less bullish. And I have increased my bullishness. Is this incredible adoption from institutions changing your projections at all? Is it changing your thought process about what ETH could do this cycle?
It is. It's definitely a hype feeling as opposed to a fundamental feeling for me. Because I know we've talked about this over the last few weeks. We've been tracking the Uncle Z Ethereum bullish bearish indicator. Mm-hmm. And I don't just want to look at the articles and be like, oh, it's going to the moon and readjust all my price targets just because the legacy media told me to. And it's like, no, I'm still sticking with it. I think that I still think that $9,000 to $10,000 Ethereum is my midpoint target. I think that is a very reasonable, a high probability chance of getting there. Hitting that 12 or 15,000, I think those are still very much my higher trajectory stuff. And the reason that I say that is still that it's right now, when it comes to the 4-year cycle, we only have a lot of talk about it going to an extended cycle instead of having our cycle high about 3 years and 11 months after the last one. So if you go on the 3 years and 11 months, we're still looking early October. That's 2 months away. So the question is, how much time do you have to run there? If you want to talk about those higher price targets, I think that those are more probabilistic when it comes to actually seeing that cycle extend a little bit into Q1 of 2025 or 26, excuse me. Again, I'm purposely very reserved when it comes to what I do here. I'm with Agent J. We say that we're going to assume the trend is going to hold until it's verified that it's broken. So until we actually get past October and start pumping into November, December, January, that's when I'm going to see that the trend is broken and start adjusting my projections accordingly. But as it stands right now, yeah, dude, all the signs looking great. We're at $4,200 Ethereum. If we got a 2x in the course of 3 months, that'd be fantastic, especially for Ethereum, which is a very heavy asset, like I talked about in the past. I mean, would I love to see those numbers? Absolutely, considering I'm someone who may be majority Ethereum backed for my portfolio personally. But again, it's always just trying to take out the bias and understand what's going on here. I can be excited. I can be excited that I might be in position to do very well if we do hit those higher price targets. But at the same time, don't have all my eggs in one basket, trying to be tempered and trying to have good practices, which not letting my bias get in the way of what I actually see as inside the realm of possibility.
Yeah, I think that's well said. My median targets are still 9 to 12,000. That's what I've been since the bear market, and that's what I've been sticking with. I'm not ready to change those. I've said 15 is possible, but like you said, it would take some unique, crazy stuff. But we're starting to see things that in the bear market I didn't really expect. I didn't expect this strategic ETH reserve to start taking off with multiple companies, racing to procure massive amounts of Ethereum. That wasn't on my bullish structure for Ethereum, right? So that's something I need to add to my analysis from a standpoint. So I'm not ready to change my numbers, but I am understanding that there are additional bullish tendencies happening that I didn't take into consideration to begin with. So therefore, I do have to realize that it could be more than I originally anticipated. And gosh, I hope it does. I mean, if ETH hits 15,000, Pulse Chain gonna go wild. Like, oh, maybe we'll have a DGen meetup in Japan at that point. I mean, I don't even know what to tell you. But,
That would be dope.
But yeah, it's just like it's the amount of craziness happening with Ethereum is wild. And honestly, I thought it was going to take a little bit longer because we haven't even had rate cuts yet. I kind of expected it to take a little longer, but it's looking very likely that we're going to get a rate cut in September. I'd give that it was 95% chance when Will and I looked at it Wednesday on both Polymarket and on FedWatch, around between 90 and 95%. So it's very likely that we're going to get a cut. And I could see a scenario where we get 3 cuts coming up to the end of the year. And, my expectation, I mean, this actually could line up really well, right? Like 4850, 4,900 Ethereum lines up pretty quickly. And then we get a pullback in September. At the time we get a rate cut. And then we slowly start to build up from there. So everything is lining up in a very unique way that we could see a crazy structure building to the upside.
I agree. I know we're talking about kind of like hopefully getting to 4,900 soon, but I do think it's very real. It's a very real possibility. As crazy as it sounds, if there's enough action in 1 week, you could achieve that from here. That's only $700.
Like, it's possible.
It could. It's possible. Again, when I was pulling up that chart earlier, the RSI is one of the things that I look at for potential price towards the upside. We just broke into that overbought area, which is above 70 on the RSI. If we even got a little more hyped and went up to like 80, 85, where we were like last month, that's looking like a very similar move. And something like that could be how you get to that all-time high level, and maybe even like creep a hair past it and try to test the waters before you get a pullback, and then trying to find a new support level. Maybe that new support level is down here at that 4,200. Again, all this is just like looking at the crystal ball, but these are very real possibilities. And this is some kind of like charting action that we've seen in the past, which is that you creep towards those upper resistance levels, you break out, test a new high, try to build a new higher low, and then after that, keep going for a new high, new higher low, and then after that, you might even get a blow off top. I don't know if we're quite there for the blow off top just yet when it comes to the 4-year cycle, but that's very interesting stuff to think about, not just from the Ethereum standpoint, but for everything else, altcoins and even like meme coins, if you want to get there. Once you get Ethereum at that level, I think it's very possible to see that altcoin season really start running, and we can see some massive gains from those altcoins and lower down even past the top 100 crypto stuff. I think that's where you could really see those big parabolic moves start to come in.
Yeah, and it's also interesting that this Pulse Chain marketing that's going out is lining up perfectly with like a move into potentially a real alt season. Is that coincidence? I don't know. But
it might be. It might not be.
Good timing. Seems like it's good timing nonetheless.
Yeah, I want to. You mentioned something really important there, which is that you said that there's a possibility that we get 3 rate cuts this year. We didn't talk about it last week, but JP Morgan Chase actually has been starting to announce that they think that that's the most likely scenario as well. They're looking at 1/4 point cuts pretty much for the rest of the year. So 3 more rate cuts. That would be going 3 for 3 when it comes to Fed meetings for the rest of 2025. Something like that would be exactly shifting from quantitative tightening to maybe some quantitative easing, aka turning on the money printers. And as we've covered rather extensively, when the money printers turn on, assets, including cryptocurrencies, tend to do very well.
Yeah. Obviously we pay a lot of attention to the Fed, and I think Jerome should have cut this past time, so that it gives more likelihood, because he's late cutting to start, that he's going to need to speed those cuts up. So 3 in a row, maybe we get 5 in a row, even moving into next year. Like I'm not willing to go that far yet, but I will say that my current scenario is 3 rate cuts: September, October, December. If I have that correctly.
Yes.
September, October, December.
We're looking at mid-September, late October, mid-December.
Yeah, that sounds right. So that's what I've been looking at. And Wednesday, I mentioned it on Wednesday. But yeah, it's certainly a possibility. So, man, it's just like all of these things are kind of happening at the same time. And when you get a lot of bullish news happening at the same time, good things tend to happen. That's why I'm like Q1, we're just getting rate cuts at the end of this year. Q1, like it's a possibility. I don't want to go there yet and say, hey, we're definitely going into Q1 2026, but I'm starting to lean that way as my thesis currently. I'm not there yet. I'm still saying end of 2025, but honestly, I'm not. This week or next week, I might change my mind and say, yeah, my base thesis is now Q1 2026. Like I'm close. I'm close there.
I know, like I mentioned, I'm reserved when it comes to this kind of stuff, but if you've been tracking what I've been saying about the possibility of going to Q1 2026, every week it starts to make more and more sense. The indicators are starting to point that way. The overall narrative is starting to build and to a point where it has some good cohesiveness within it. And it makes sense. I'm not there yet, but I understand the sentiment, and I understand why people are seeing that kind of become almost the more popular projection.
It's feeling that way. And, wouldn't it be funny that Jerome cuts late, but because he cuts late, it actually helps us pump higher and longer? Like,
that would be one of those things.
I don't know, but it's literally, it's possible that even though I think he should have cutting later actually might be better for our cycle.
It's entirely possible. When it comes to the political and governmental world, I think that the rest of 2025 and maybe very early 26 is where you're going to continue to see some of those larger actions being taken. We're going to start coming up to midterm cycle in 2026. When we get to that, I don't expect to see a whole lot out of Congress, especially from individual legislators who have their seats up for re-election in this next cycle. So I think 2025 is going to be the year of big action. 2026, things are going to die down. I don't necessarily think the Fed is going to fall into that cycle as well, but overall, that's what I'm seeing. So we still have legislation inside of the government right now that's still very pro-crypto, whether that is the Clarity Act, the Anti-CBDC Surveillance Act, and then also even some tax proposal adjustments by, Cynthia Loomis. Those have been being heard in committee and might actually start making it into bills sometime soon. So 2025, I think if we're going to see stuff from the government side that could really help bolster the narrative, that's when I think we're going to see it happen. As far as the Fed, yeah, the rest of the year makes sense. Maybe even some early 2026 stuff. I'm very curious to see the next Federal Reserve meeting, because we're going to get the next update for the projections, that sweet PDF document with all the charts and dot graphs that I love looking at and obsessing over. So that's where we're going to get the next one of those, and that'll actually give us a good visualization of what they're projecting and how it's changed from the past. I think that the risk of inflation has decreased since the initial increase in risk of inflation earlier in the year when they were talking about all the tariff stuff. We've seen a lot of that stuff get hammered out. So again, we're going towards a more stable business environment. I think that the projections that we're going to see adjust accordingly. We might see some different stuff when it comes to the jobs market that we've covered previously in the past year. And again, that could be the fodder that the Fed uses to make that pivot, if you will.
Yeah, and let's not forget that Kugler, she stepped down to go back to teaching. So we have a vacancy in the Fed, which, her term only went to January, which we talked about on Wednesday. But that means that they're able to have implement a temporary pick, which from Trump was Stephen Moran, very pro Bitcoin, very pro, sees eye to eye on a lot of things with Trump and the economy. So we're now taking someone that voted against rate cuts and adding someone who's going to be very pro rate cuts to go along with the two dissenters from the last Fed meeting. So it's looking, even because he's getting put in there, it's looking even more and more likely that we're going to get multiple rate cuts before the end of the year. And by the way, when we get the first rate cut, I do expect a little dip on the first rate cut. However, I don't expect it to be a lot, because in the past, the market only could move when the Fed actually moved. Now, because we have poly market, now because we have so many things to see what's going to happen before it happens, most of those things are priced in beforehand. So it's not like it was in the old days where it's like, okay, are they going to cut or not cut? And then, it shocks the market. They've been expecting a rate cut now since like the day after they didn't cut in July. So the market's already pricing it in. And so I don't think it'll be a big pullback, but we could see a pullback. And that is something that we need to keep our eyes on.
Very true. We do have two excellent comments here on the topic. Our very own Agent J, he's saying, goodness, at least stop the quantitative tightening. Well, not even asking for the QE, just stopping the QT would be a big shift for the market, I think. And then also we got our buddy Beyond All. Hello, sir. He says, hey, Degens, the M2 money chart has printed a local or cycle top, which also falls at the end of October for Bitcoin with the 90-day adjustment or the M2 money supply offset. These are interesting notes for sure. So I think we talked about it. It was last Sunday or the week before that. We talked about the different possible M2 money supply offsets that people use to look at the potential future price action on Bitcoin. So
you guys did it last week.
Yeah, 90-day adjustment. You can either look at that like it was like 103, or you can go for an 82-day adjustment. That's right in the middle there. So again, timelines, they're lining up, baby. They're lining up.
Man, it's just interesting that so many bullish things are lining up again. I mean, like, we haven't revisited our perfect storm theory, but if you were to ask me, there's actually one or two things that we didn't even have as best case scenarios that are happening. This ETH strategic reserve being one of them. So I don't want to get too excited, because that can make you when you get too emotional, it can make you make poor decisions. And so I want to remind everyone to really try to keep your emotions in check. And as you see more and more green candles, it's very, very easy to continue to say with more, certainty, extended cycle. Oh, we're going to Q2 2026. Like, you're going to start hearing that from people, and you have to realize, like, hey, you got to take a step back, and you have to look at the data that is presented to you, and you have to make a non-emotional decision, because it becomes harder and harder the more the green candles pump. So just a reminder there, just to temper expectations. Not that it's not going to happen, but you have to make sure that your emotions are out of the game when you're making these decisions, especially when you're getting towards the top of a cycle, because it's very easy to get over bullish and then round trip.
Very true. Very true. By the way,
I wish that I wasn't
here.
I wish I wasn't streaming from. Oh, go ahead. I'm delayed. You do it.
All right. AJ is saying late easing of the monetary policy is precisely one of the big variables to consider for an extension of the top. So,
which is what I was just talking about. Yeah,
exactly. Jay's right there with you. Will, good sir, what do you got?
I was just going to say, to tee off of what Brennan was saying, it's all campfire stories. And as people get more emotional, they tell more and more appealing campfire stories. And then that's how everybody gets swept up into the narrative. That's how everyone gets swept up into the excitement of the cycle. And that's really when, like, the people who have been sitting in the dumps the longest, having bought the lows for such a long period of time, that's when they do the best, is during that time span. So if you're new to the cycle, if you're new to cryptocurrency in general, and you see everyone else around you acting all excited, just try and be mindful of that. That's all that I had to say on that topic.
Hey, it's very true. Also, even Will, the chat's even agreeing with you on this one. I mean, I'd be remiss if I didn't bring up the most important chart that we've have for all of markets, which is the old psychology of the market cycle here. And our boys, Benny Blanco, he's saying hello, mates, but also I will never let myself feel euphoric again. So we get to that euphoria, that's the top. If you stick in it too long, you can really get screwed on that one. Although Tony is on a slightly different standpoint here. He's starving for it. Maybe not, hopefully not to feel euphoric yourself, but to recognize the euphoria so that we can actually take some profits, if you will.
Absolutely right.
Ready.
So,
Z, when you're choosing a background, is the option in there the one that I put down that allows a little text at the bottom center right around this zone? Has our stream times and things. I think I put it in
that
the
one.
Oh, look at that! Look at that! No more dead space. I like it. Do you guys like it?
I like it.
Yeah, it's nice. Just to get people bullish on Ethereum, if we're not already making you bullish, can I play a clip from the one and only Joseph Lubin?
Yes, sir.
I'm going to share my screen here. Hopefully this is the right tab. Let me know when we're in. You can see me.
We're in.
And let me know if you can hear this. It's quick, so.
Talk about the flippening, where Ether will eclipse the monetary base size of Bitcoin. Some people that think that'll never happen. Some people think that'll take a few years. I think we may see astonishing things in the next year or so, especially with these treasury companies driving things. Talk about
Whew. Did you catch that? Did you catch everything he said there?
Yeah. So we have Brendan. Who is this again?
This is Joseph Lubin. He is the CEO of SharpLink Gaming.
Okay.
I noticed that he gave his own little thing a nod. He's like, hey, look at all these guys with these Ethereum strategic reserves in their companies.
Yeah.
By the way, I happen to have an Ethereum strategic reserve in my company. It's just like, oh yes, look at us all doing so well. I thought that was fun.
Are we surprised?
So him and Tommy Lee, right? So Bitmine and SharpLink, they've been going around on a lot of shows, and they're just like oozing bullishness. So, like, keep in mind, right? This guy just bought, what's SharpLink at right now? Because by the way, they bought more. They added more today or this weekend. They're at 2.2 billion. So yeah, is he trying to pump his own bags a little bit? Maybe. But it is interesting. He said, I think there could be some shocking things happening with ETH in the next year or so. So he thinks that ETH isn't going to have a bear market. Now, is he being real, or is he trying to pump his bags a little bit?
I personally think he's on the pump my bag side of the house. I think that it's a little foolish to deny all the previous market forces that have shown themselves time and time again. Also, the narrative of Ethereum flipping Bitcoin is a bit of an old one. Granted, it's starting to resurface again, but to be honest, it kind of falls for me under the nothing new under the sun category. So I'm personally not expecting Ethereum to flip Bitcoin anytime ever, because I just think that Bitcoin has solidified itself so heavily and so firmly that the other stuff, they're going to have utility, but Bitcoin, I think, really has started to cement itself as that digital store of value. It will always be bigger than the rest. It's not going to be as useful as the rest, but it will be bigger.
Yeah, and think about it this way, right? If Ethereum went to 15,000, right, which is what we're looking at as potentially our, bullish high, right? Like not our baseline or what our expectations are, but even at 15,000, right? That's a little over a 3x from here. Ethereum's market cap would only be about, 1.5 trillion. And so even if Bitcoin didn't go up at all from here, it would still be half of what Bitcoin's, like, not half, but say Bitcoin gets to 3 trillion. It would be half of what Bitcoin's is, even if it gets to 15,000. So it's a tough sell for me. I've never been on the Ethereum flipping. When I was first getting into crypto, or really getting big into crypto, that was a big thing. They're like, okay, this cycle, Ethereum is going to flip Bitcoin. And I was never there. I never believed that. It didn't make sense to me. Could it happen in the future because of the utility of Ethereum? There is a possibility for it, but I don't think it's any chance that it's as quick as people are expecting. And then I will say Richard Hart also had a tweet. Let me see if I can just pull it up quick, because he mentioned something about the flippening, but he tweeted so much this week, or so many X posts. He said, when do you think, here we go. Ethereum, I ain't ever heard of no sextuple top. Yeah, it's actually spelled like that. Bitcoin at one price, do you think ETH flipping Bitcoin threads start popping up? 10K question mark. So if Richard Hart says, when do you think it starts popping up? 10K question mark. Does that mean he thinks Ethereum is going higher this cycle than 10K?
I think it's possible. I think it's definitely, I think a lot of people are expecting it to, which, I mean, we covered it earlier on. Yeah, a lot of people do have those higher price targets like 12, 15, 18, 24. Like, people have high hopes for Ethereum. I don't know if they're founded or not, but I think people have those high hopes. And if we even start to approach some of those areas, yeah, I think Richard Hart's right on this one. People are going to start pumping that narrative more and more again. But to do the quick analysis here for you, in order to get that, we would have to see some serious change. So this is the ETH Bitcoin ratio right now. We're at 0.035. And if we go flip over to CoinGecko, Bitcoin is $2.3 trillion, 2.4 trillion if you want to round it. Ethereum is about 515 billion, meaning that Ethereum is is about 4.5 times smaller than Bitcoin when it comes to the market cap. If you want to go to that ratio, then that means that this ratio is pretty much going to have to go up 4 times the amount. So that would pretty much be
While
there.
Bitcoin doesn't move at all.
Yes and no. So thanks to the ETH Bitcoin, if you just go based on the market cap, yes, you are correct, Will. If you want to go with the ratio, which will also include the ability of Bitcoin to move as well, if you're always dividing by Bitcoin, then it doesn't matter what the Bitcoin price does. It kind of just means that Ethereum is going to have to run even harder to account for it. But something like that, we're looking at ratios that we haven't seen since like back in 2017 at the top.
Yeah, it's pretty wild. And man, if he somehow flips Bitcoin, I don't even want to think about how what my bags would look like at that point. But that's like extra moon math. That's like moon math.
Everything is crazy until it happens the first time. You know, people used to say that they're like a human being could never run a 5-minute mile, and then it happened. And now a bunch of human beings run a 5-minute mile. And there's all sorts of, that's the only one that springs to my head. Everything is crazy until it happens. You know, it's not to say that it's going to happen or people should get their hopes up or whatever the hell. Again, nothing we talk about here is financial advice. I'm just a peanut brain driving about the States, thinking about things. Everything's possible, and we have no idea what's about to happen. So if it does happen, boy howdy, are we in for an interesting world, and will a lot of people have to be eating some of their words and nice big old slices of humble pie and stuff? That's just my 2 cents on it.
Well,
true.
I think it's good. I think it's fair. I do have something to share, Zenith, if you don't mind.
Yes, sir.
So this is pretty funny to me. I mean, let me know when
ready.
So this is essentially just a meme, 30-second commercial. Utility coin here. I'm going to stay here, right? Because the number one utility coin.
That's fucking awesome.
I thought that was hilarious.
Felt oddly Slavic. Our man was rocking the Adidas tracksuit there, not the classic street stripe, but the other one.
Yeah, but look, I think the commercial kind of says what the market is right now. It's a Bitcoin's king right now, and it's going to take a lot for that to change. Utility of Ethereum, if it truly catches on, like, you know, in the banking system, in the governments, like if they actually use Ethereum, then potentially at some point in the future, I don't see it. Bitcoin's just too scarce, and it has such a head start. It'd be really hard for Ethereum to flip it.
I agree.
But I'm not going to say never, because like 50 years from now, like what's going to be more usable? You know, like, do we have a different utility chain that's better than Ethereum? Right? Like, there's so many variables that we can't think about. But, you know, I'm not going to say never. I'd be surprised.
I would be as well. I mean, maybe I'm hoping over here that Sonic becomes the main one, but that's definitely a pipe dream for sure.
Yeah, I know you and me are not seeing Sonic the same way.
Different strokes for different folks. Neither here nor there. There's a reason it's not the back of my portfolio. That would be a YOLO all-in full port moment, which we're not doing that.
Yeah,
all right,
let's go ahead and ETH or ETH adjacent coins.
True. All right, let's shift gears here a little bit. We're at about the 1 hour mark. Will, do you have the sign?
I do have the sign. Here is the sign. Bam! It's time for chat fucking shoutouts, baby.
There you go. We had some people sneaking in here. Tin Top coming in saying, "What's up, Hexicans? Good to see you, brother." Benny Blanco stopped by as well. Caught him earlier. Brown Farmer Jay, he was saying that he can't blame those CEOs for trying to pump their bags, and yeah, Tony definitely agreed with him. Additionally, we have a good friend of ours, Dr. H. Yeah, the crypto practor. He says, "How the fuck are you degen lovelies?" And speaking of people joining us, we also have boom, our very own Agent J. Stand by.
Ooh, Agent J is also me.
Yes,
What's
we are
up,
all
Jay?
Agent,
Yo,
we are
what's
all
up?
Agent J.
Yep, superimposed me onto Will's screen. What up, buddy?
Sure. How you doing, my man? Glad to have you here with us.
I'm doing excellent. I just finished dinner, had some time, so I figured I'd hop on here. I haven't been here in a while, so why not, right? How you guys doing?
Absolutely. Fantastic, sir. Fantastic. I know we caught your chats coming in there. Let us know what you're thinking about the possibility of that extended cycle.
It's the possibilities there. And when we've spoken about this before, I think if there was one cycle that I was going to put my money on that was going to be extended, it is this, because not only do you have mass adoption happening left and right, Bitcoin, that was already pretty obvious. Ethereum is finally starting to catch up. Like you guys have spoken about over the past few weeks, entities like SharpLink Gaming have been accumulating at a significant clip.
An aggressive rate, if you will.
Aggressive rate. And the amount of money so even though Ethereum is at a fairly large market cap, the amount of money that it'll take for Ethereum to move is not as much as the amount of money that it would take for Bitcoin to move. And so in terms of the speed at which we can get to those high-end numbers, I know that you and Brendan mentioned that your mid targets are around the $9,000 to $10,000 area. Those are also, I'm actually a lot more conservative. I think $9,000 to $10,000 Ethereum by the end of this year would actually be a very nice. It would be very nice. But it's certainly possible for us to move to that $10,000 area within 3 months, just because of how much smaller the amount of capital that would be required injected into Ethereum in order to move that price. Right? But I obviously would not be complaining if we get an extended cycle. And if monetary policy, I know the market has priced in the rate cuts in September, right? It's 90%. That's probably the highest we've seen across Polymarket, across Kalshi, across the CME in quite a significant period of time. Now, obviously, it's more than a month out, and you guys already know what my stance is on assuming what the Fed will do more than a week's time out. Because a lot of people priced in the rate cut in, I think it was like the beginning of Q2, and we didn't get that. I mean, we didn't get anything in Q2. So I will reserve my excitement until we actually cross that bridge. But if we get a rate cut in September and then another in October and then another in November or December, then that could potentially push us over into I wouldn't say late I wouldn't say late 2026, probably bleed into Q1, early Q2 of 2026. And then that's our bear market, right? And that'll extend the bull market, but it will not extend the 4-year cycle unless we get a low after 2026.
Yeah. Hey, Jay, good to see you, buddy. Didn't expect to see you tonight. What a pleasure.
Good to see you, Bean.
I think it's a good point. You know, I'm very curious what happens this cycle in regards to if we have an extended 4-year cycle from a top standpoint, but the bottom still lines up at the end of the year like everything else, because that will give us much better data of how we should really be measuring the 4-year cycles. So it would also make it more challenging to predict where the tops are going to be if we start measuring more from the bottoms, because that means the top's going to be a bit more unpredictable. So that does make it a little bit more challenging. Could be more challenging, but I'm very curious because I do think that information will be very helpful for us for future cycles.
Yeah. Yeah, if we get a low at the exact same time frame again in 2026, that'd be what? 4 data points? 4 data points where it happened at the exact same time. The tops just happen to also align around Q3, Q4 of the post-halving year. And that hasn't broken yet, at least for Bitcoin. Ethereum has had some bleed over in past cycles. So if Bitcoin is not going to do it, the altcoins might potentially do it, being led by Ethereum.
Super utility token Ethereum.
I mean, you guys do bring up a good point there, which was talking about indicators. I think that I'm curious to see what happens to the indicators as we know them right now. Pi cycle top indicator, I think, is probably one of the most popular ones that we use. MVRV is another one. And as we've seen over the last few cycles, those indicators may be weakening a little bit. So, I mean, if you look up the Pi cycle top indicator as it stands right now, it's looking like it's pretty far away from anywhere being like it's going to hit. If you look back at 2021, we just barely kissed it, where we had that simple moving average of 111 days come up and touch that 350 times 2. Since then, we've stayed well away from it. And as we are right now, we're arguably farther away than we have been at pretty much any point in the start of the bull market. So I'm curious to see if our top cycle indicators or cycle top indicators are going to change.
Yeah, we might have to temper our expectations on exactly which cycle top indicators we're going to be able to rely on moving forward. Because a big thesis right now, at least when it comes to some of these on-chain indicators, is that you're not even going to kiss the you're not even going to get that cross, right? You're not even going to get that grace. You're not even going to get a peck on the cheek. You might have to use a descending trend line. I know Twinkie has showed us that descending trend line that he's had drawn out for the Pi cycle top indicator on our like prior Telegram streams, but you might have you're certainly going to have to reevaluate your indicators for a top indicator this 4-year cycle. Right? I think some of them are going to miss.
Again, that's why we don't use any just one, but other ones out there. MVRV for the folks at home. Market value versus realized value. This is the Z score, so this is a indexed version of that right there. But as you can see in the past, pretty much anytime it gets over this 6 line right here, that is when it appears to be a cycle top. The interesting thing is that last cycle on this one in particular, it hit that 7 number. 7 is the number instead of 6. It hit that back in March of 2021, as opposed to the true cycle top, which happened in November of 2021. Because even for that second one, it was still down here at about 3.6 ish. And I mean, we've already seen that this cycle when we had our pump back in December of 24. So again, I think there's a good argument to say that the old top indicators are not as strong as they used to be.
Yeah. Check out the Z score. You might have to just use a trend line here.
Yeah, that sounds about right. Yep. I'd be curious to see what kind of. You probably have to do some sort of curve fit to get a good representation of it, because we have hard top here, hard top here, hard top here, smaller top here. So it might be some sort of like logarithmic curve or some sort of decay, but at the same time, might take some big brains and a good bit of math to figure that one out.
Yeah, and let's not forget there are some non-chart things that we can look at too for cycle tops. Last time Coinbase being the number 1 app on the App Store was a very good indicator that retail was in and they were buying people's bags at the top. So because this cycle is a bit unique, or could become a bit unique, I think we just need to take as many different factors and kind of look at a lot of different things when we're trying to predict what the top is or when the top is.
Yeah, that's another thing, right? The social metrics for crypto right now are in the shitter. Let's talk about the number of people searching for crypto-related things. It's certainly not anywhere near close to DeFi summer of 2021. Right. So sentiment from retail, if you're expecting that retail is going to come back, it's certainly not high, and they're certainly not here just yet.
Which is good. I mean, it feels like almost every top has been, when retail has really started to jump in. Now, each cycle retail is, what the percentage is going to change, but those metrics are going to be very interesting to look at. But again, what if retail doesn't jump in as much as they did before because the institutions are doing it, right? It might not be as good of an indicator. However, generally speaking, whenever the markets get hot is when people, like you said, Jay, really start paying attention, the normies. And so if I don't see the normies paying attention, that's generally a pretty good sign that we're not close to the top yet.
Yeah.
And if we're not close to the top, I'm feeling pretty good.
You mentioned an interesting stat there, though, which is saying that if the Coinbase app gets to the top of the App Store, that's one. One of the interesting things I've been seeing going on with the markets lately is that we are actually seeing some of the central exchange platforms have a bit of a resurgence when it comes to their own tokens. So this is the Binance token right here, hit a new high at about $860 there, been creeping up, it's sitting at about 809 itself. Another one that I'm watching is the crypto.com token. This is the one that gets plastered all over the UFC. So for those folks that like watching that, this is where you can get. Again, been on a very steady rise, pretty much in alignment with Ethereum as well. But we're starting to see that those central exchange platforms, they're starting to see a growth in their tokens as well.
When was that daily high there, Z?
Which one? This one right here?
Yeah, for CRO.
This is back in December of 2024.
2024. Well, they certainly have recovered from the reissuance. I know a lot of people were kind of miffed at that, but it seems like that was a pretty good move.
Definitely.
Not for the decentralized maxis, though.
Decentralization, in my opinion, will
But
probably
this is a
beat
sex
out a lot
token.
of the stuff in the long term.
Yeah.
Alrighty. Tell you what, gentlemen, let's shift gears. I do have a new article here that I do want to bring up, and that is we're back to talking about debanking.
Ooh.
So coming to us from Boo indeed. Coming to us from Cointelegraph, crypto debanking is still occurring as banks stick to checkpoint policies. You might remember last week, Will and I were on here gushing about Project Crypto, which was an actual announcement from the SEC talking about how they want all the markets to go on chain. They want to try to remove the last remnants of Operation Choke Point 2.0, and they want to actually provide a place for crypto tokens that are deemed securities to play instead of just become dead. So going to the article here. Despite the president's pro-crypto stance, Union CEO says U.S. banks continue closing accounts for crypto firms under Operation Choke Point. Crypto firms have been facing account closures and denials of banking services for years under the label of de-risking. Many in the crypto industry believe that debanking represents a policy-driven effort to suppress digital assets, often referred to as Operation Choke Point 2.0. After the president's pro-crypto team won the election, many believe the era of debanking was over. His campaign rhetoric and early policy moves signaled a friendlier environment for digital assets, leading some to expect banks would ease restrictions on crypto clients. However, recent incidents suggest that the practice remains entrenched. Last week, Anderson Howarth's partner, Alex Rampel, warned that big banks are squeezing fintech and crypto apps in what they're calling Operation Choke Point 3.0 by hiking fees to access account data or transfer funds to platforms like Coinbase and Robinhood. There you go. We're getting reports that the squeeze is still on. Is this a surprise to anybody?
No. I'll take point on being the cynic that the government is bad and that the banks are bad and that the big bad people are going to do big bad things. Like it's par for the course. You're a small ant in a big anthill. There's a whole bunch of people clomping around with their boots on, and they see you out there grasping for power, and they see these other companies out there empowering the individual. They're probably going to be like, nah, we can't be having any of that. The power belongs to us. That's my cynical take on it. It doesn't surprise me in the least that it is continuing to happen. And one of the other things is like, and I don't want to get too political here, but Trump's whole presidency was one on let's do crypto stuff. Let's release the Epstein files. Let's drain the swamp. Let's do all that. Frankly, I haven't seen a whole lot of results of that kind of push or anything. And you just, like you were saying, you see more and more of these banks continue to debank people where there's been a whole bunch of, I don't want to say promises kept, not followed through, because he did pardon, who are those dudes? Not the Storm guys. Mount Gox. Not Tornado Cash, not him. Ross Ulbricht. He did do some great stuff with Ross. So for that I'm thankful and stuff, but like we are seeing a lot of the former SEC garbage being undone, but until we see like actual real tangible results, I just consider it all to be a whole bunch of hot air and hot smoke, and I'm looking for results, not words. That's my particular my particular take. Is it? Am I crazy here? Am I wearing too much tinfoil on my head? Somebody pull me back.
I mean, well, the only thing I'll say is everything with the government takes way longer than you expect. It's almost impossible just to make things happen. And Trump's had a ton of pro-crypto executive orders. So from a crypto standpoint, I think he's very much been keeping his word. He actually spoke this week and said the debanking of crypto from banks is wrong, and he's going to have an executive order that, which we'll probably see this week, that will we'll see how it's going to work, but it's going to somehow hurt banks that aren't allowing people to use crypto. So I guess penalize banks that do practice debanking of crypto. And if that were to happen, so he said two things: that one, and two, he wants to his executive order mandating that all banks allow their holders to purchase crypto. If that were to happen, that would be kind of huge. Let me show you this chart here, because we talk about how many banks and how great crypto's been. But if you actually look at this, pulling it up now, Tefra Digital put this out, and this shows what banking platforms are pro-crypto. And 1, 2, 3, 4, 5. There are 5 that have unrestricted exposure. But even the ones that allow some exposure, they have a lot of restrictions. And you can see there's almost double complete prohibited purchasing of crypto by many banks as well, including Vanguard, who said that they're going to be changing, and some others, right? And so if that were to happen and all of these banks start to go here to unrestricted exposure, and look, maybe some of these go unrestricted and some of these go to restricted. Nonetheless, if we start moving more of these into allowing people to buy crypto from these banks, then that could potentially add a lot more money into the market. And who knows how long that would take. Again, I need to see what this executive order is actually going to say. But as you can see, like, the debanking is serious. It's huge. This chart shows it right here.
Yeah, Will, I don't think you're wrong to go from the standpoint of it's hard to actually see things go into fruition and actually see things materialize. But the way that they can do it is, one, we pass legislation. That is the slowest route possible. But the other one is executive order. So coming to us from, again, same article. On Thursday, Bloomberg reported that President Trump will sign an executive order directing federal bank regulators to identify and penalize financial institutions that have engaged in debanking. The order will reportedly require regulators to review complaint data, while banks overseen by the Small Business Administration must work to reinstate clients who were unlawfully denied services. Konanikin expressed hope that President Trump's proposed executive order to curb debanking could bring relief. Quote, the president knows the pain of debanking firsthand and seems determined to stop this form of economic warfare against American businesses. He said ending debanking could help U.S. crypto reclaim global leadership. Ending the war on crypto will boost the American crypto industry. It may become as impactful internationally as Hollywood is in entertainment or Silicon Valley in IT. And by the way, we do actually have the official executive order here. So from the president of the desk of the president, we have guaranteeing fair banking for all Americans on August 7th.
There we go.
Purpose.
I have not read this yet.
Number 1, financial institutions have engaged in unacceptable practices to restrict law-abiding individuals and businesses' access to financial services on the basis of political or religious beliefs or lawful business activities. That's the one where crypto falls. Some financial institutions participated in government-directed surveillance programs targeting persons participating in activities and causes commonly associated with conservatism and the political right following the events that occurred at or near the U.S. Capitol on January 6, 2021. The federal government suggests that such institutions flag individuals who made transactions related to companies like Cabela's and Bass Pro Shop, or who made peer-to-peer payments that involved terms like Trump or MAGA, even though there was no specific evidence tying those individuals to criminal conduct. We jump down a little bit, we can get to the policy section. It is the policy of the United States that no American should be denied access to financial services because of their constitutionality or statutory protected beliefs, affiliation, or political views. and to ensure that politicized or unlawful debanking is not used as a tool to inhibit such beliefs, affiliations, or political views. Banking decisions must instead be made on the basis of individualized, objective, and risk-based analyses. So it's actually an interesting one here, which is that this word means a lot more than the average person thinks. So risk-based analysis, that is where you actually quantify risk. There's the other kind of analysis, which is just trying to debank people based on sentiment or public opinion effectively. And that's kind of what they're getting at here. So for me, when I read this, the initial thing that I'm looking at here is that this is very broad language that's trying to capture not just politically protected speech, but also it's activities that are not illegal, but activities that just certain people don't like. If any of you guys have been following the saga that's been ongoing with Steam and Visa and MasterCard, Steam has been pressured by Visa and MasterCard and the banks to remove content that isn't illegal, but just stuff that they don't like. It tends to fall more in the adult category of games, but this has been something that's been picked up a lot through kind of like the online media space. I believe Asmongold has been following this one pretty heavily as well. But pretty much what's been going on with that saga is that there was a group in Australia, I think it's called United Action or something. They wrote somewhere, it was upwards of like 1,000 emails to Visa and MasterCard, basically just complaining that there's stuff that they thought was objectionable, not illegal, just objectionable in their own personal opinion. And then as a result, Visa and MasterCard updated their terms of service to allow them to deny services to anything that they thought might be a brand risk. So the brand risk is where you get into that kind of like vibe sentiment or looking at stuff that is along the lines of not actually mathematically provable risk, but just like public sentiment. So when we look at the executive order here, where we talk about having individualized, objective, and risk-based analyses, this is saying you got to quantify risk on traditional metrics instead of just doing whatever the hell you want, pretty much. So do you guys think that this kind of language is actually effective at removing the risk of getting debanked for just having a preference for crypto? Or is this kind of just a stopgap measure?
Well, oftentimes, you know, when you sign an executive order, oftentimes agencies need to figure out how they actually put that into implementation and how they actually issue the regulations. So it's kind of wait and see a little bit on how they're actually going to implement it. But it's at least something. It's at least something.
Fair enough. I think that the executive orders are executive orders issued by the presidency, which is direction to the rest of the federal agencies under his direction. It can shift, especially depending on who's president. So again, to go back to Will's point, until you have hard legislation on it, it does make sense. But at the same time, though, theoretically, in a perfect world, the agencies should be operating under good faith, and a lot of the executive orders should carry between presidency to presidency. So based on that and kind of the shift that we've seen so far, I think this is great news, but I don't think it's permanent. And that's one of the big questions I have for it.
I'm inclined to agree with you there. I think that a lot of the executive orders, like you just saw the difference of like when Trump left office, Biden got in, when Biden left office, Trump got in, just all of the executive orders that were like whimsically canceled, and whimsically is the wrong word, but just things being shut down, things being fixed, things being changed. I would agree that I don't think this probably has longevity, and I'll again take the cynical stance that at the end of the day, I think that they're going to look to try and extract more power, more sovereignty, more freedom away from the individual, and turn people into more of a cash cow subscription service kind of thing. That's the general direction that I presume that these sort of things will take, just like extended over a long enough period of time. So we might have a nice little lull in the firefight right now, at which time we can reload, reassess, and put ourselves in a better place. But I don't think it's got longevity, and I am inclined to take the cynical take. Agent Jade, you got any thoughts on any of this stuff?
I'm in complete agreement with you. Executive order is nice, but unless you actually create legislation behind it, you're not going to get anywhere. Last time I checked, banks are still private entities. So if their board of directors think that allowing crypto into their institutions creates some kind of financial risk, reputational risk to them, they're not going to put it on, right? that's the price you pay for having a capitalistic society. Right?
Yeah.
Like private entities can conduct business as they see fit unless they're breaking some law. And so unless there's actually regulation to back up this presidential order, it's just for show. Just for sure.
And I want
I
to tack onto that, Jay. This reinforces the importance of not just relying on a bank for your financials. Have cash, use cryptocurrency, keep some bars of gold, keep some chickens, like do whatever you can to maintain some level of ability to trade your value with other people. Don't even rely on a single bank. I've got USA, I've got Navy Federal, I've got Old Glory Bank. I also use cryptocurrency things. I'm probably going to start opening up more bank accounts in places. But like if you get added to whatever the persona non grata list is that they had over there at Chase or JP Morgan or Bank of America or whatever the heck, and all of a sudden you find yourself not being able to use your plastic, use your chip to chip, use your little electronic payment system, reminder, wake up, people. This is why we're getting into cryptocurrency, or at least it's one of the big reasons why, for me personally. So that's the 2 cents I got there.
Yeah, and I'd like to add to that a little bit. There have been some good executive orders too, right? Like when Trump reversed the SAB 121. I mean, that was awful for banks in crypto, right? So that was really, really important to repeal that. And I do think he's trying, but like you said, legislation takes a long time. And until we get really good legislation, some of these measures are just stopgap, to try to put pressure on banks to do things. So if they can do something to actually penalize the banks or not, that's yet to be seen. We'll see, right, how the implementation happens. But nonetheless, those things are good. But I will also add, oh man, I just lost my train of thought. But I started with a story earlier when we started the show. I had a friend text me this week, and towards the the bear market bottom, I was talking to him about Bitcoin and crypto, and we were at a steakhouse in New York, and I was explaining to him why it's important to get into crypto now. And he was like, "This was under last administration, right? We had crypto choke point 2.0 going on," and he was like, "Well, what if they just outright ban it here in the United States? Like, what's going to happen?" I said, well, the ball's already rolling, and it's already picking up too much steam to be able to stop it. And at that point, I think a lot of people, and he's well read. He understands, worldwide financial markets, but he was hesitant. And yesterday he texted me, and I'll read the text. He said, "Bought my first cryptocurrency. As a result of offshore bank accounts being surprisingly difficult to navigate without a lawyer." It's like there's so many ways that banks make it difficult for you to actually get your money to where you want, or to get your money to who you want. And they control far too much of how we're able to use our money. And it took all of that. And I've had more conversations with him about crypto since. He's someone that I could see getting into it a lot more in the future, but he's definitely one of those leaning in the less risk type person. And for him to text me that hey, I'm having trouble with these banking systems, that I have to buy crypto, and hopefully some of these restrictions from banks stop, but nonetheless it might just push more and more of your savvy investor into cryptocurrencies just because they have no other choice.
The reason that I see that this topic is being discussed more and more now, obviously as crypto guys, we've been talking about this for a long time. But what's interesting about this particular time frame is that I think we're actually starting to see the intersection of a lot of different things, and they're all pointing at the financials and the banking sectors as a continuous weak point for whatever it comes to. I think you have a lot of overlap between the most recent thing going on with Steam, the gaming platform, and we also have a lot of old stories of like firearms dealers, FFLs getting debanked under the previous administration. We have a lot of politically protected speech coming on, and then we also have the crypto folks coming out, and everything is converging at this one point, which is the banks have become a choke point for a lot of this different stuff. Jay brought up a really good point earlier, which I'm very inclined to agree with, which is that libertarian free market ideal, which is that as a private business owner, you have the ability to conduct your business as you see fit. I think that the counterpoint to that is that as it stands right now, the banking industry has kind of become a little bit monopolistic. And additionally, banking and financial services is one of the most highly regulated areas of a business inside of the United States and internationally. Additionally, I'm starting to see more arguments of people making online, which is that banking in the year 2025 should actually be seen more as a utility instead of a private institution, which is that in the year 2025, try doing anything without a bank or some sort of financial backing because it's nearly impossible to do so. So I see that the conversation is starting to shift a little bit, and I see this inflection point where we see all these different groups that are coming together and pointing at the banking sector. It could be that it's just happened to be under a specific administration that has been financially prosecuted in the last 4 years effectively, that it's actually at a point where they can start making changes on it, or they're more inclined to try to make changes on it. I just see this as an interesting point in history where a lot of similar arguments, but made from different groups, are all converging on the same thing, which is that when you choke out people through financial and banking transactions, that becomes a serious issue in today's day and age where we become heavily reliant on it. Do you guys think the argument that banking is becoming more of a utility as opposed to a private business, does that make sense to you guys, or do you just push back against that one vehemently?
I don't like the idea of banking being considered a utility similar to electric, but like in electric, you have options, right? Like a very good friend of mine is an electricity salesman, and they go around the state of Texas and they give people better rates on electricity, where most everyone like presupposes that it's just there is one number and that's all you get. And it's like, no, there's a free market for this in many, many places. And you know, if banking was treated more like that, then I think it'd be a much more beautiful world. But I gotta, when you said they're kind of a monopoly earlier, Zenith, it's like, nah, bro, fucking banks are a total monopoly. Like they own the financial, the financial world. Like there is no alternative. There is, like, we don't live in the world of cash anymore. We don't live in the world of, writing checks kind of exists, but like there is a very, very, very serious banking cartel that like gets bailed out by the government, like in 2008, or like in I can't remember what the other one was before that, but like there's all sorts of terrible, horrible things that banks can do to people, and it's like you don't got much choice because that's the only way that human beings can like trade their value betwixt each other, is by using this. It's a really cool tool. It's a neat idea, and it's nifty when it's implemented well and without prejudice and like, you know, with the sense of free market capitalism, or I don't want to say justice, but just like blindedness for how the tool is used, you know. So I see it being used as a weapon often enough that it concerns me to the point where I think that I need to like pull back out of the system, or at least have backstops or points where I don't have to worry about, you know, the failure of the system. So that's to your original question about is it starting to become a utility? I could see it going down that road. I don't think I would like that very much at all, but it is definitely a necessity. So I suppose it's just a game of definitions. You definitely need banking, similar to how you need electricity. You know, we can't just go around and operate without banking. We can't just get paid by our employer by cash in hand. Oh, well, actually, you can. I do it quite often, but it's just like there's way better systems out there. There's anyways, all that to say, I think that it could be going in that direction, broski, and I would hate for it to become that officially, but yeah, possibly.
Z,
what do you guys thoughts?
Can you clarify some definitions here for me? What do you mean when you say banking as a utility and banking as a what was the other one?
Oh, like private business institution?
Yeah, like what's the distinction between the two? Because I've always seen banks as a utility because they have utility.
Definitely, they have utility from the standpoint of the word of utility means like the ability to do multiple things that are required and kind of like necessary for life. So the reason that I think the banks in particular is a weird split of the two is that having the ability to transact is very, very important and necessary for pretty much every daily function that you do. The other side of this, though, is that banks actually offer a lot of services that utilities do not, which is that under utility, kind of the guideline that they've been operating under is that specifically for like telecom communications kind of stuff, which is that as long as you're not doing anything illegal, you shouldn't be prohibited from doing it. Just because the utility doesn't exactly like the things that you say over their phone line doesn't mean that they should have the ability to turn you off. That's the argument that's being made when it comes to banking, which is that as long as you're not doing anything explicitly illegal, just because someone doesn't like you doing something means that they should be able to turn off your transaction. The counterpoint to this one, though, which is that where I largely fall in this camp, which is free market and libertarian, which is that from the business standpoint, you are not obligated to provide your business's services to anybody. As a business, you theoretically have the ability to refuse service to anyone as long as it's not some sort of protection action or class. So that's where you get into stuff when it comes to banks offering services and yield-bearing accounts. It's the ability to not just transact, but it's the ability for the bank to operate in their business, take you into their fold, start doing loans, start doing certificates of deposit, start doing transactions beyond just day-to-day transactions. That's the kind of stuff where it gets in that gray zone, in my opinion. So you have the two contrasting points, which is banking a business service that you pay for and then you also get benefit from, or is banking just the ability to have a checkings and a savings account and transact money between point A to point B?
They're both. I would say they're both. Right? You can't isolate each from the other, but part and parcel with them being both is you as the customer having to live with the consequences of the choice that you make when choosing your banking institutions. Banks don't necessarily. This whole argument between whether banks are discriminating against crypto, I think people might have their definitions mixed up, right? Just because the bank is freezing your transactions with crypto doesn't mean that they're discriminating against it. Remember that in the prior administration, there was a lot of uncertainty and there was a lot of shenanigans that were going on within the crypto industry. I think we can name the top 5 that happened in 2022 that kind of broke the camel's back, right? And so a lot of these entities were extremely cautious, and you compound that by the fact that you had a sitting president and a Democratic president that wasn't exactly. It was a shame because a lot of his Democratic constituents, right, in Congress and in the Senate, especially in Congress, were fairly pro crypto, but he understood nothing of it, and so he just basically parroted the stuff that his side of the aisle spoke to him about, right? The Jamie Dimons, the Elizabeth Warrens, right? His cohort of people within that sector. That's who he believed. And so, what are the banks left to do, right? If you don't have people in their ivory towers, right? Like in the White Houses, right? The people in power. If you don't have people in power lobbying for this kind of technology, and all you're hearing, right? They're not listening to you and me. They're listening to what the Senate Banking Committee and what the Financial Services Committee in Congress are saying. And what they're hearing is that crypto is bad. What they're hearing is crypto has a lot of scams. And so what are they going to do? Every single time they see a crypto transaction, right? Like you have the potential to be flagged. Right? And that's part and parcel of the sacrifice that you have to make and the piece that you have to make when you're selecting that financial entity. Right now, you could certainly transact peer-to-peer, like what Bitcoin was designed to do, but you also have to live with those consequences. Right? There is no FDIC insurance for peer-to-peer transactions with Bitcoin. There's no such thing. Okay? So if you lose $100,000 worth of Bitcoin transacting peer-to-peer, you can't call Chase customer service and tell them that you got scammed. Okay? If you send it to the wrong address, you can't say takebacks. Right? It's in the ether. It's into the void. Right? So is it something that we extremely dislike? Yeah, absolutely. Right? But at the end of the day, here's where all of this ends up. The technology has reached escape velocity. That's my personal opinion. Right? I still hold the opinion that crypto is the final frontier of finance. Bitcoin is the final frontier of finance, and it has reached escape velocity. Not only do you have the most powerful nations in the world accepting it as a form of payment, as a store of value. You have the most powerful country now adopting the technology, right? And with open arms. It has reached escape velocity. And in due time, the demand will increase to the degree that all capitalist institutions, all businesses, all entrepreneurs are going to have to accept that if they want the inflow of capital that's going to come with people adopting the technology of crypto, you are going to have to get with the program. So if this is indeed still Operation Choke Point 2.0 and has not been stopped, it's going to slow it down a little bit more, but it's not going to stop it, right? That time has come and gone. Right. Crypto has reached escape velocity.
That makes sense. When it comes to, I like the argument you're making there, which is that we've hit that escape velocity. So we're going to get to the point where crypto becomes a dominant force and we start to see those free market ideals and ideals but take charge, which is that it's going to be inconvenient not to deal with crypto. It's going to be less advantageous not to deal with crypto. And eventually the market forces will get to the point where it behooves people to start interacting with the system instead of keep trying to deny it. That makes sense for sure. I was going to say,
what Jamie Dimon did just a few weeks ago.
Can you elaborate on that one?
Yeah, he was like, I don't like crypto, but our customers want it. So I don't like it, but our customers want it. He wants your money.
Yes, they're going to open up their bank for their customers, even though he's like, I don't like it.
And this was Mr. Crypto's a scam, right? It's the only time that him and Elizabeth Warren have ever agreed on anything.
It's true. I think that the landscape that we're dealing with now is also an evolution of everything else in the past as well, which is that over the last few years, we've seen the collapse of small and medium-sized banks. We've seen crypto be embraced by the United States, not just governmentally, but also from the market standpoint as well. And we're coming to points here where people are asking things to be done and changes to be made. Here's I personally view banking as possibly one of the most critical points of the entire global economic infrastructure. So when we're meddling with this stuff, I take it very, very seriously in both directions, both from what the banking sector is doing to the rest of the economy, and then also what people are trying to impose on the banking sector itself. So when we come to these kinds of inflection points and decision makings, or people asking for decision making, I want to make sure that we're doing a good bit of what Will and I have talked about when it comes to some Thomas Sowell and Adam Smith there. So my pop quiz for Will is, whenever we're trying to make decisions, what sort of stuff should we also be thinking of?
The trade-offs.
Trade-offs? That's Thomas Sowell. And then what's our Adam Smith quote on this one?
I don't remember the Adam Smith one.
Second and third order effects.
Oh, okay.
There you go.
It's a similar idea to trade-offs, is like, what's going to be the outcome of you doing this thing that you don't intend, or not that you don't intend, but that is a result of the outcome, and then the result of that result, et cetera, right?
Exactly. So again, I think it comes down to the idea that it's a lot bigger than what you initially are just proposing. So it's the stuff that we talked about in the past, which is that we wanted banks to theoretically start accepting crypto. But then the way that they did it is that they held it under the liabilities category instead of the assets category. Eventually, we got to change there. And now we're at the current battle here, which is actually trying to ensure that banks are no longer choke points to getting money on chain. Again, I think there's going to be some down order effects that we might not even think of just yet. But that's the kind of stuff that I worry about when it comes to these decisions.
I will add, I don't think banking is a monopoly. I would call it an oligopoly. Oligopoly, yeah. So you have a few powerful banks that run the entire system, and I do believe that in some cases there is probably some cohesion within their decision-making processes that is better for the banking system than for the people that they're supposed to be supporting, which is their customers. So you always have to be worried about that. And look, if I was a bank, would I be a little worried about crypto coming in and taking profits from me because maybe we have another way to transact now that is outside of the traditional system? Yes, look, I would, if I was a powerful banking system, would I want to give up my control that I've had on the international money supply forever? No,
Absolutely
I
not.
wouldn't, right? So you also have to take into consideration that there's this like power play that comes into a situation for some of these banks. And it's also why some of these banks want to own crypto, because they want some control over it. So whenever there's a possibility for large banking corporations or banking cartels, as someone said earlier, to lose some of their power nationally and internationally, then yes, there's going to be a fight, and it's going to be bitter at some point. So look, it could get worse at some point than it currently is. Like, it actually could get worse if banking system starts to erode because of, you know, the adoption and use of crypto. So, you know, who knows? I'm not saying short term, but there could be some sort of long term battle there in the future because of a shift in how the world uses their money.
Makes sense. Once you have something established that deeply, giving it up is very, very foolish. So I think you're entirely right, which is that if there's a fight, they're going to fight with everything they got. And makes sense. And that's also a big opponent you're going up against if it's the entire international banking order, or at least the one in the US.
There's an interesting counterspin that just like a thought process here that I don't know how much truth it holds or not, but it's like, you know, they are going to fight the control being wrenched from their hands. And the flip side that I would take to look at it is like, if this is what the people that are spending the money want to do, then you can get a larger share of the market by like if you only sell hamburgers and then like all of a sudden some people start wanting hot dogs, you know, you're like, nah, we only sell hamburgers. And then it's like the hot dog people, it's like, they're taking away all our hamburger making profits. It's like, well, I could just, you know, sell a couple hot dogs here or there, or something like that. Is the, like, they could theoretically make a little bit more by catering to the market that wants to do their thing, by empowering the people to make their freedom loving decisions. I don't know. It's a little thing that popped into my head just now.
Fair enough.
Give the folks what they want.
Tell you what, while we got you here, Jay, we covered Ethereum for the first bit of the stream, and I know that this is something you and I and everyone else in the X space is going back and forth on. But do we finally have consensus that we're on a new 60-day cycle for Bitcoin?
So I would say whether you were on the failed cycle count or you were in the count that you and I preferred, we ended up on the exact same cycle low. The failed cycle count ended up at around day 60. I think it was like 1 day shy of day 60. And then our cycle count ended early at around day 42 or 43, I think. Left translated cycle for Bitcoin, right translated cycle for Ethereum. So, as always, you end up in the exact same cycle low.
Agreed, sir. Yeah, you're entirely correct on all accounts. So, cycle count that we were going off of, we had a day 42, day 22 cycle high. The other one was the 59 with, I want to say it was day 39 cycle high. But the main point is that we have consensus again, so we can finally stop arguing amongst ourselves and get back on the same track here. It's interesting. Bitcoin is back trying to touch that 120,000 level again. And then after that, we are back in price discovery. So as far as me personally, I have some high hopes of over the next 60 days. And as we talked about in the beginning of the stream as well, I think this lines up really nicely with a lot of those big dates coming up.
Yeah. And Ethereum just made a new cycle high today. Just like literally while we were streaming.
I was just going to say that.
Oh,
yeah,
shoot.
Before we closed.
43.50.
Yeah.
Ooh, feels good.
Sure
and Bitcoin's
does.
pushing up closer to 120 as well.
Yeah.
Jay, I know you and I are going to be talking a lot about the financial indicators coming up, but can you give a quick preview for the folks about what we should be looking for this week?
So there is a lot of high impact news coming out this week. So a few of the things that me and Z were discussing earlier, just to name a few, this should already be on your economic calendars because we've spoken about a few of this already over at the DRT Telegram streams. So we've got Core and headline CPI coming out Tuesday, so that's pretty big. It's stable to neutral, right? It's so unless that thing changes significantly, I don't think it's going to move the market that much, right? If it comes in bearish, expect a little bit of a dip. If it comes in bullish, then expect the pump to continue. But even if we do get a dip, I don't expect it to giganukas back down. And then we have the producer price index on Thursday. That's also a measure of inflation. And August 15th, right, we have $1.5 billion being unlocked by the FTX estate going back to their creditors. So they're getting it back in stables. They're not getting it in crypto. So they're not getting their Bitcoin or their Solana or their Ethereum back. They're getting it in stables. And they're either going to just take their bags and go home, or they're going to inject that back into the market, right? So that's pretty big. And then finally, we have, we spoke about SharpLink Gaming earlier. They're having their earnings report this week as well, and that is a very good sentiment read, right? If SharpLink, which based on the move that Ethereum has made over the past 24 hours on a freaking Saturday out of all days, right?
Yep.
It's kind of crazy. You don't expect that kind of volatility into the weekend with that kind of volume from the crypto bros. Remember, the only people that are awake are us, gang. It's just the crypto bros, man. Right? Everybody else is asleep. Right? CME doesn't open until like a few hours ago today. So to get that kind of massive volume injection over the weekend out of all points in time is crazy. Craziness. That was not on my bingo card, but I'm happy to see it. All right.
It helps when somebody like SharpLink adds a lot of ETH to their portfolio on a weekend.
Yeah. So they're when we get the earnings reports, and I predict that it's going to be a nice little earnings report for their investors. I think sentiment is just going to keep going up for Ethereum. So
Love to hear it. Alrighty. Will, for the final time of the show, can you hit us with the chat shout out sign, please?
Yes, I've got it right motherfucking here. Ladies and germs, it's time for chat monkey fucking shout outs.
Alrighty, we had a few folks sneaking in here and some good friends of ours that we're very excited to see. BLX, aka Black Label Expat, coming in here. He says, personally, I'm waiting for Kramer to say everyone should have a Bitcoin as the final top signal. That would be quite the top signal, especially if I'm taking you literally here, saying that he's saying everyone should have one whole Bitcoin. That's a lot of money to have. That might be a pretty darn big top signal. Outside of that, I'm glad to see that you guys enjoyed the show tonight as much as we did. Tam saying great conversation. Love you guys. Love you as well. Miss Amber Simone coming in here as well. Very good episode. Very informative. That's what we hope to do. And last but not least, Funkmaster Hex just giving one last here for everybody out there, including Agent J. I know he's missed you. Says cheers, fellas. Cheers to you, good sir. Alrighty, gentlemen, let's get it going around the table. Any final thoughts on the topics tonight? And where can the folks find you? Starting off with Mr. Will Stevenson.
I've got no thoughts other than make sure that you guys are free and sovereign individuals, that you cover your self-security, your transportation, your ability to transact, and your ability to speak. If you can cover those four things, you'll be a sovereign individual. Other than that, you guys can find me and everything that I'm doing at will.pls.fyi. I'm slowly making my way up to Portland, Oregon. I am currently about to cross into New Mexico from Texas. So shout out to everybody on the way in between here and there. Kenturian, if you're watching, I'm gonna try and swing by your farm, broski, and see if I can come feed some cows with you. So if you're not watching, I'll reach out and call you probably tomorrow sometime during a reasonable hour. But everyone else, that's all I got. Mr. Agent J, what about you, broski? Where can the folks find you and what you got going on in there? Oh, before I go, we're covering Alpha God, the historical perspective and the evolutionary psychology of religious oppression
figures
and violence and figures and things. Yeah, I don't remember the entire tagline, but that's what we're covering for this this Friday's book club, ladies and germs. So look forward to it. That's all I got. Agent J, where can the folks find you, and what have you got going on in the near future, broski?
You can find me on Telegram. Scan a QR code. That's where I spend most of my time. I'm not even gonna give my socials because I don't spend any crypto time on my socials, man. I spend all my crypto time on Telegram. We've got a open market market open stream. Sorry, I have dyslexia sometimes. I have a market open stream scheduled tomorrow for around 7:30 a.m. Arizona time. So convert that to whatever it is your time, wherever your time zone is. And that's what I've got going on, man. Produce a lot of content for the Telegram, so that's where you can find me. Like the damn video, comment, subscribe, scan the QR code, jump in a Telegram chat. Thank you for joining us. We know that time is your most valuable asset, so we do appreciate that you spend some of that time here with us. Bean.
Good to see you, Jay, Will, and Zenith. Great chopping it up. Love the topics today. Some hopium and bullishness. I mean, just incredible amounts of bullish things going on with ETH market in general. So it's exciting. You know, we've been waiting a long time for this. And I know a lot of people capitulated and didn't get here. So if you got here and didn't capitulate, then props and congrats and enjoy the ride. Other than that, yeah, I'm moving in a week and should be on stream Wednesday, hopefully. Depends on what time I get back for my flight. But nonetheless, find me on X, anonymous_bean. And then I do spend a lot of time in the Telegram chat as well. So yeah, great to see everybody and stay positive.
Love to hear it, folks.
Take us out.
Will do. Thank you very much, gentlemen. Everyone, you can find me on Instagram and X at zenithdi. I am also in the Telegrams, trying to add some excellent value in there as well. But outside of that, I got to say, not trying to pump our own backs too much here, but I think this is a very critical time in the market, especially as we try to figure out what the cycle top is going to look like, whether we have the traditional 4-year to 4-year cycle top, or if we actually might have the possibility of having that bit of an extended cycle and we start going into Q1 of 2025. Things are only going to pick up from here. I'm going to keep saying it until it stops being true, but crypto is about to get stupid hot. So I know we talk about that psychology of markets chart all the time, but it's very important to remember that the euphoria will kick in at some point. Please don't get caught up in it and buy the top and then round trip all the way down to the bottom. That would be not a very financially smart move. Ask us how we know this. Some of us may have done it once or twice before and are trying to learn from our actions, but we hope that you can learn from us instead of making this mistake yourself. Outside of that, I do have to say, I want to thank you all for spending your valuable time with us here on DGen Roundtable. As Agent J just said, we know that time is your most valuable asset, and we appreciate you investing it right here with us. Ladies and gentlemen, my name is Zenith, but more importantly, you have been watching the DGen Roundtable. So, Mr. Producer, that is me. Go ahead and get that trigger finger ready, because it's time to remind all the folks at home to remember to DGen responsibly.